Let's start with a number that doesn't really make sense to the human brain. If someone handed you $1 every single second, it would take you about 11 days to become a millionaire. Keep going, and you'd hit $1 billion in 31 years. But a trillion? You'd have to start counting back when woolly mammoths were still walking the earth, almost 35,000 years ago. And you still wouldn't be done today. On June 12th, 2026, one person crossed that line for the first time in human history. Elon Musk became the world's first trillionaire. But here's the question we're actually going to dig into. Is this the biggest success story in financial history, or one of the most questionable valuations Wall Street has ever produced? Let's find out. Quick context before we get into the trillion-dollar moment. This video isn't about whether Elon Musk is a good guy or a bad guy. It's about the math, how a real person's net worth went from zero to broke to the richest human being who has ever lived, and whether the number we're seeing right now actually means what people think it means. By the end, you'll understand exactly how this happened, and why some of the smartest people on Wall Street are calling it a bubble. To understand June 2026, we have to rewind all the way to 2002. That year, Musk walked away from the sale of PayPal to eBay with about $180 million after taxes. Most people in that position would buy a few houses and call it a life well lived. Musk did the opposite. He took almost all of it and bet it on two ideas that, at the time, sounded slightly insane. He put $100 million into a rocket company that most of the aerospace industry thought would fail. That company was SpaceX. He put another $70 million into a small, struggling electric car startup most people had never heard of. That was Tesla. By 2008, both bets looked like disasters. SpaceX had 3 failed rocket launches in a row. Tesla was weeks from running out of cash entirely. Musk was reportedly so low on personal funds that he was relying on loans from friends just to get by. Then, right at the edge of total collapse, both companies turned a corner. SpaceX won a major NASA contract that kept it alive. Tesla went public in 2010 and slowly proved that electric cars weren't a fringe idea. Over the next 15 years, that initial bet didn't just pay off, it multiplied thousands of times over. So how do you go from nearly broke in 2008 to becoming the richest person who has ever lived less than 20 years later? The answer comes down to a single Friday in June. The moment that made Musk a trillionaire wasn't Tesla. It was SpaceX going public. On June 12th, 2026, SpaceX listed on the NASDAQ stock exchange at $135 per share, valuing the company at roughly $1.77 trillion and raising $75 billion, the largest IPO in history. By the time trading closed that day, the stock had climbed past $160 a share. SpaceX's total value had crossed $2 trillion, making it briefly one of the most valuable companies on Earth. Because Musk owns somewhere between 40 and 42% of SpaceX, his personal stake alone jumped to hundreds of billions of dollars in value, almost overnight. Before that Friday, Musk's estimated net worth was already enormous, around $813 billion, according to Forbes. By the time the market closed, it had climbed to roughly $1.14 trillion. To put that in perspective, his net worth grew by more in a single afternoon than most companies are worth in their entire existence. From the outside, this looks like the greatest investment story ever told. But a growing number of financial analysts are asking a much more uncomfortable question. Was this wealth actually earned, or was the system tilted in his favor? Before we get into the controversy, let's just sit with how big this number actually is. Because honestly, the human brain isn't built to understand it. If Musk spent $1 million every single day, it would take him over 2,700 years to spend his entire fortune. If you lined up a trillion $1 bills end to end, that line would wrap around the sun nearly 40 times. Musk is now richer than the poorest 46% of the entire human population combined. That's an estimated 3.8 billion people. He's also nearly 4 times wealthier than the world's second richest person. Numbers like this don't just describe wealth anymore. They start to describe power. So here's where things get genuinely controversial. A handful of structural details around this IPO have raised eyebrows across Wall Street. First, the rules were bent. Normally, a newly public company has to wait up to a year of trading before it can be added to a major stock market index, like the NASDAQ 100. But for SpaceX, NASDAQ changed that rule, fast-tracking entry to just 15 trading days after listing. Why does that matter? Because once a stock joins a major index, every retirement fund and index fund tracking that index is required to buy shares of it, automatically, regardless of price. That includes pension money belonging to teachers, firefighters, and everyday retirees who never chose to invest in SpaceX specifically. Several major U.S. pension funds actually wrote formal letters raising concerns about this exact issue. Second, the valuation doesn't match the financials. SpaceX's IPO filing showed the company brought in about $18.6 billion in revenue last year. But its newer AI-focused division alone posted a loss of more than $6 billion. In other words, a company that just got valued at nearly $2 trillion is, in some of its core divisions, still losing money. Third, there's the influence factor. Musk currently holds a major role overseeing government efficiency efforts, which gives him visibility into the very federal agencies that regulate his own companies, including aviation and securities regulators. Critics argue this creates a conflict of interest that an ordinary CEO would never be allowed to have. Some analysts have gone further, suggesting the SpaceX listing may have partly served as an exit opportunity for early investors in Musk's other, less profitable ventures, letting them convert older, weaker holdings into shares of a much more hyped company before the broader public could fully price in the risk. So, is Elon Musk really a trillionaire? On paper, yes. By every official measure, he is. But here's the catch. He can't actually spend most of it. Musk is restricted from immediately selling the bulk of his new SpaceX shares. And even if he tried, selling $1 trillion worth of stock all at once would crash the very price that created that wealth in the first place. In other words, this $1 trillion is real, but it's also fragile. It exists as long as the market believes the story behind it. What Musk has built with reusable rockets and electric vehicles is genuinely historic. That part isn't in question. But whether first trillionaire represents earned value or a valuation bubble waiting to deflate is something even professional investors don't agree on. History has shown that every era of extreme wealth concentration eventually meets a correction. The only real question left is timing. And who ends up holding the risk when it happens? So what do you think? Is Musk the greatest entrepreneur of our generation, or is this the biggest valuation bubble Wall Street has ever inflated? Drop your take in the comments. I genuinely want to know where you land on this. And if you want more videos breaking down big confusing financial topics like this one, hit subscribe. We post something new every week. See you in the next one.